Welcome to the RedChip Virtual Conference.
I'm stepping in for Pat Geppel, our Chief Executive Officer. Unfortunately, he had some technical troubles and couldn't make the call. We're going to review today our Q2 investor presentation. If you've been with us before, some of it will be similar. If you haven't, we're certainly looking forward to any feedback you have on how to keep the presentations interesting and improve upon them. So with that, as you know, any statements made in this presentation which are not historical facts are forward-looking statements that involve risks and uncertainties which could cause actual results to differ materially from those contained in any forward-looking statements made in this presentation. Asure Software is an industry leader in cloud-based workplace management solutions. We have currently 3,000 clients deploying our products in both a SaaS and a perpetual license model. All of our products have complementary hardware products, and we offer implementation, customization, and other professional services to add value, increase retention, and really delight our clients. Our mission is to deliver innovative technology with a passion to empower every client's workplace and a commitment to make each workday easier for our clients' employees. We have two workplace solutions. The first one is called Asure Force, and this is a full suite of time and attendance or time and labor management solutions. You think of your old time clocks where you punch in and punch out with a piece of paper. Our software does that and a whole lot more, depending upon what your company needs. We have obviously time tracking. We have paid time off and vacation planning. We have timesheets for allocation of costs and other time management solutions. We have a couple different varieties in that space that lend to the small market as well as the medium and the low side of the enterprise market. Customers for Asure Force include Salesforce.com, deployed in 3 different locations all over the world, and a number of major universities and such. Meeting Room Manager is our meeting room scheduling software. That is available in both a SaaS environment as well as a one-time license model. We are obviously pushing a cloud-based software because we're looking to maximize recurring revenue. We have hardware solutions such as an interactive LCD touchscreen, which you can put outside your meeting rooms. Customers like McDonald's has our product in their corporate headquarters with LCD panels. What's nice about our panels is if somebody has taken your room, you can simply punch into the panel, find a new room, and head over there to reserve it. And additionally, you can integrate audio-visual requests, catering requests, and really anything you need to make your meetings more productive in the office. Our value prop is really around low-cost, rapid deployment and ease of integration, and an ease of use for the end user. So what's nice about our products is once the employee base starts using them, they become very difficult to migrate away from. Our time and attendance product is often used by a large population of the company's employees, and our meeting room scheduling can be used by admins in office management, or all the way down to being offered to every employee through an in Microsoft Outlook integration. We can be highly configurable to clients' rules without costly customization. And as I mentioned, we do have a proven track record of global installations. Our main promise here, what I want you to get out of this slide here, is that we are trying to delight our clients in everything that we do. We want to create value, which strengthens our recurring revenue and our retention, and we want to make our clients' lives and their employees easier to get through the day and be more efficient so they can maximize productivity in their core competencies. This next slide is a little busy. It's around our time and labor management competition and ecosystem. I'm sure you've all heard of Kronos, which is in the dead center. There's a number of different types of companies that compete in this area. There's workforce management companies such as NetSuite and Dayforce. There's integrated HR management that really goes to the higher end of the market. We don't necessarily compete with folks like SAP and Workday and SaaS HR very often. We normally compete with time and attendance only solutions in the small and mid-market. Folks like NovaTime, Swipe Clock on the low end, Time America. What's nice about our solution is we are not the lowest cost provider, but we do have a nice cost to value ratio where if we are in a competition with somebody like Kronos, which is clearly the 800-pound gorilla in this marketplace, you know, they're literally double the cost of our service. If we're competing with them, you know, they have a lot more complicated and sophisticated scheduling and other types of services that we don't offer. So, you know, if we're in competition with somebody like Kronos, it's really a price game, and we usually win. From a vendor positioning, you know, we put ourselves in the mid-sized business market. It's roughly a $300 million market. We do compete on the small side of business as well, but really we leave the enterprise, you know, 5,000 employees and up. We really do not compete in that area. From a meeting management system, there's only a few meeting room scheduling companies, and of that, Asure Software is the only publicly traded company. There are other players in this area, such as facility management and energy management, and even people scheduling companies that compete in this area. They're usually offering a larger suite of products. PeopleCube is the biggest player. And what they've done that's a little bit different is they've integrated energy management and facility management products with their suite of room scheduling. So, you know, that would, if people are looking for that kind of investment, we don't offer those services. Our core competency is around meeting room and asset scheduling. And again, we're on the mid-sized business. You may recognize some of these other names. Obviously, Microsoft Outlook on the small business side is a very rudimentary product for scheduling meetings. Often, if you've worked in an environment where they use that, it's very difficult to understand what rooms are available unless you actually pull all of those rooms into your calendar requests, and you may not know the names of all of those rooms. So, you know, from a mid-sized business, we do offer, and we'll get to some more employee different customer names. We do excel in the mid-sized business and do go down to you know, some basic offerings for the small side. From a market landscape, there's not a lot of industry research on the meeting room resource management. There's no clear leader in the mid to market space. Obviously, I mentioned PeopleCube is a big player in the enterprise space. And we feel, based on some research, that it's around a $100 million market opportunity. Time and attendance is part of HR management in general. It is a subset of an enormous $32 billion opportunity. There's no clear player in the mid-size space. Recently, Asure has done a couple smaller acquisitions as part of a continuing roll-up strategy to try to gain market share. But right now, we're roughly around 2% of that space. And 88% of our business is based in the U.S. We've had a bit of a complicated history. We had a new executive team, including Pat and myself, in late 2009. We had just entered the company after a proxy fight in a year in which the company lost almost $10 million on $10 million in revenue. So the turnaround started then. We had a roughly 70% recurring revenue at that point, and we've stepped it up over time, 76 to roughly 84% at the end of 2011. 2010 was really refocusing the business on a turnaround. We had some one-time costs to get out of some real estate and some other things that were causing the company cash drain. But when you take apart all that noise, we were really profitable for the year, excluding those one-time costs. 2011 was a great year. We had 2 acquisitions in the fourth quarter. We had some good cash flow per share. We had some good EBITDA, excluding one-times. And as I mentioned, we got that 70% recurring revenue base up to 84%. In 2012, we're going to continue to grow organically. We've got an exciting new platform that we're launching. We've got mobile apps for both of our products, Apple and Android, and we're projecting roughly $18 million in revenue, $3 million in free cash flow, and $4 million in EBITDA, excluding one-time costs, which are largely acquisition. And we had a bit of noise around some convertible debt and unusual mark-to-market accounting in Q4 and Q1. But all said and done, we're going to be right around $4 million for the year. This next slide is a bit busy. It's got some good historical tracking. What I really wanted to point out here towards the bottom is since management came online, we have a steady record of improving free cash flow after the turnaround, increasing recurring revenue, and a good track record for earnings. We recently had a stock split in May. It was 3 for 2, and we've reset a few of our metrics post-acquisition, such as recurring revenue percentage from 84 to 76, as you see in the lower right-hand corner. One of the acquisitions that we purchased, or really both of them, are very heavy on time clock solutions for the time and labor management. Particularly of note is that ADI Time that we acquired in October had their own proprietary solution, time clock, and that's been selling very well, and I'm getting roughly 50 points on that gross margin instead of probably 20 that I was getting on selling third-party clocks. As I mentioned, our guidance for 2012, I don't have to go through this again, but it's there if you want to see the detail. From an organic growth perspective, we have a lot of opportunity where we are in one division of a university or 3 divisions of a big company like GE or Salesforce, where we are working on expanding those relationships and building global contracts and expanding those relationships to maximize our good name and product across the rest of those divisions. But you see here a handful of big names. We do, particularly on the meeting room management side, we do excel at the corporate headquarters, education, healthcare, and in legal very well. This next slide is much of the same. What it really shows us is, as I mentioned, we're roughly 88% in the U.S. We do have some customers in Europe and globally. But what's nice is we have some big names that can take us, and really, we're really working to expand our global footprint at this time. This next slide is a time and labor management slide. What I like about this slide is it shows the value in our acquisition of ADI Time. In the light blue, you can see the industry verticals that Asure played in, which were really the white-collar verticals. When we picked up ADI Time, we gained a nice presence in the blue-collar verticals, places that we had never been able to sell into, such as manufacturing or retail. We're presenting here a few slides around cloud adoption. This first slide shows the stages with regard to folks that are currently utilizing cloud computing. What you can see here is that a high percentage are either evaluating, considering, or actually planning to go to the cloud, and a very low percentage are actually using it department-wide or enterprise-wide. The business units shown here that are currently using the cloud, so we got a high percentage of folks that are looking to go to the cloud, but a very low percentage of folks in the HR vertical here that are currently using cloud. So there's a big opportunity, and there's a low adoption rate currently in the HR area. So that's a big opportunity for Asure Software. Lastly, we believe we're poised for growth. There's a chart here down the bottom showing projected cloud computing service revenue in billions. Obviously, we're going to get as much as that as we can, but even if we were to maintain a 2% market share, you can see that there is a tremendous growth opportunity for the company. We have good solutions. We have proven partners. We are offering cloud-based products and we've been offering cloud-based products longer than most in our industry. And we believe we have a good financial position to bring this company to hit our 2012 goals and to keep going on our roll-up and acquisition strategies. And with that, I'm happy to answer any questions.
David, thank you. First off, on behalf of RedChip and all those participating, I'd like to say thank you for taking the time to present this morning and be with us here and answer some questions. So we'll go ahead and jump right into Q&A. Which one of your products contributes the most to revenue top line, AsureForce or Meeting Room Manager?
Prior to our acquisitions, we were roughly 50-50, but we're about 2/3 time and labor right now.
Thank you, David. Next question. Can you give us some more color into customer retention rate and excuse me here. Yeah, can you give me some more color into what Asure's customer retention rate?
Yeah, sure. So on our newer products, such as the products that we acquired in our meeting room scheduling, we're in the low 90s in terms of revenue retention for existing customers. Our older products are probably in the mid 80s, but we continue to do things like price increases and new databases and things to continue to grow that customer base. But particularly iEmployee has been a SaaS solution since the mid-2000s, and there's usually roughly a 7-year cycle as companies get bigger. What's nice now is we do feel that we have a next-gen product with what we are working on as our new platform, which is based on the ADI Time solution. We are going to be, instead of losing those customers, we're going to be looking forward to migrating them to a more modern solution with our proprietary time clock solutions.
Thank you, David. Next question. Approximately how many partners does Asure currently have right now?
We have about 30 partners right now. Some of them are new, some of them are long producing. We have most of our partners are in the time and labor space, where they're a payroll provider or a larger payroll service bureau service, and they sell our time and labor solutions. We have API integrations to all the major payroll products. On the meeting room scheduling side, we have some international partners right now. We have one in United Arab Emirates and one that covers Australia, New Zealand. And what's nice now is we've got 3 folks in our channel group which are building our partner base as we speak, and also servicing the needs of our existing partners.
Thank you, David. Next question here is concerning the company's debt. Is it correct that it's a 15% interest rate? And what's Asure's plans to pay off that debt in the future?
Okay, so when we did the ADI Time acquisition, we took out a number of different debts. So we have roughly $1.7 million that is at 15%. We did have to get that together pretty quickly, which is why we got that rate. We had another 1.5 in convertible debt at 9%. Happy to report that 1.15 million out of that 1.5 converted in March. So that leaves us the responsibility of paying that principal. Really, we're looking at free cash flow generation to pay off some of that debt quickly, and we're also looking at refinancing everything as well. And we're working on that now, but I have no news to report.
Thank you, Dave. Next question. Is cloud computing growth more rapid either in the United States or overseas, particularly in Europe?
So I'll answer that in 2 parts. I think cloud computing is growing much more rapidly in the U.S. With U.S. Solutions, because there's concern around time latency. So our servers are located in either Atlanta or Waltham, Massachusetts. So you have some concern around selling internationally and pinging a server thousands of miles away. So what we're working on with our international partners is building a hosting site somewhere in Europe so we can get the European business more SaaS focused and less perpetual. So our 12% of clients that are outside the U.S. Is a large percentage of them are on maintenance and service on a perpetual versus SaaS. So that is one of our key strategies to build something closer to those clients so that we can bring them on to a SaaS model.
Thank you, David. Another question about that, or somewhere in that same direction, but what are some of the ways that Asure is attempting to gain more market share in the time and attendance space business services?
Right now, it's really around our new platform. So when we acquired ADI Time, both Asure and ADI Time were building a next-gen platform. So that's part of the reason we bought the company. There was a number of other reasons, but one was we were both developing, so there was some synergies there in terms of a pickup platform. And we picked ADI Time. They were much farther along. They had really good client base, and what we're doing there is we're really integrating a lot of the applications in a modern architecture. And we're really looking at building the things. So, what are the features and functionalities that we lost deals for, or we lost out to competition for, and we're building all that in. And we do feel like it'll give us a tremendous opportunity. Our partners are very excited about selling it. It's going to be predominantly SaaS, and in some cases SaaS only. To really build that recurring revenue. But that's the biggest thing we're doing, is building a modern architecture built around our proprietary time clocks, which are, from a technology standpoint, offer a lot more than some of the clocks that have been around for 10 years that are really the industry norm right now.
Thank you, David. Next question. Can you give us some more color into how the current economic climate has affected your customers and what their preferences are regarding time and labor management solutions compared to your competitors?
So I think that the biggest problem we have right now is we're competing with folks that can offer consolidation of services. So like an ADP or some of the bigger payroll can offer a basic time and attendance solution. Really doesn't have the features and functionalities we have. But if people are looking for vendor consolidation, not necessarily savings, but that can be problematic for us. But it works both ways. We have clients that tell us they're changing payroll providers, but they want to keep our time solution. And do we have an API to Ceridian or Paychex or whomever? And of course the answer is yes, we do. So our products are very sticky. Like I said, you've got to retrain every employee if you're changing your time and labor solution, and nobody wants to do that. But right now, from an economic environment, I would say we're not feeling that too much. What's nice is that we're offering SaaS solutions which are low cost to implement and recurring fees, rather than companies that are out there offering big investments in perpetual licenses and highly customized installations with behind their current firewalls and such. So I would say the market's probably helping us a little bit against our competitions, because we are some of the first players in the true SaaS environment.
Thank you, David. Next question. What value, or what underlying value, would you say is most important for investors to explore or look at before taking a position in Asure, and why should they?
I would say myself and the management team, we do still feel the stock's undervalued. We do have, 76% recurring revenue. We have high customer retention. We have new products. We have proprietary, hardware solutions. I mean, from a multiple standpoint, there are companies that are being sold at 3, 4, 5 times recurring revenue, and for us, we're nowhere near valued at that. So, plus, we've got a seasoned board, we've got a seasoned CEO that has been, Chief Revenue Officer at Ceridian, President of Fidelity Investments, business on HR services outsourcing. I mean, we have sort of a rock star cast here that really can take this company to the $100 million level, over the next 5 or so years. We're committed to continue to grow both organically as well as inorganically, and we're just looking for folks to come along for the ride.
Sounds good. Well, thank you, David. Again, I'd like to say thank you on behalf of all those participating in RedChip companies. Thank you for taking the time to participate today at the RedChip Small Cap Virtual Conference. We're glad you could make it.
Thank you very much.
This video is not a recommendation or solicitation to purchase or sell any security, nor does it constitute investment advice. Visit redchip.com for full disclosures on RedChip clients.